Welcome to this week's energy market wrap from Enverus. Let's start in U.S. upstream with a deal that reorders the Haynesville. Mitsubishi is acquiring Aethon's upstream and midstream assets for roughly $7.53 billion, including debt, giving the Japanese company a full-scale entry into U.S. natural gas with about 2.1 billion cubic feet per day of current production and a plan to grow volumes by the back half of the decade. It is another clear signal that international capital is moving decisively into North American gas. Staying in U.S. upstream, Devon and Coterra are reportedly in early merger discussions. Nothing is guaranteed at this stage, but a tie-up could create one of the largest shale producers with complementary footprints across the Delaware, Anadarko, and Marcellus, and broadened exposure to liquids and gas. Now to midstream, Kinder Morgan and Phillips 66 launched a second open season for the Western Gateway Refined Products Corridor, this time adding access into Los Angeles and more origin points for supply optionality. The project's design links Texas origins to Arizona, California, and Las Vegas using new-build segments and strategic line reversals. In the Permian, Western Midstream amended its largest remaining cost of service agreement with Occidental and signed a new fixed-fee gathering and processing deal with Conoco Phillips. The shift accelerates Western's move to a simplified, fully fixed fee model with minimum volume commitments that steady throughput and reduce related party concentration. On the Gulf Coast, Texas LNG is now fully sold out after a 1 million ton per annum agreement with RWE. With offtake locked, the sponsor turns toward project financing ahead of a final investment decision targeted for early this year. Over to oilfield services. Halliburton framed 2026 as a year of rebalancing, with North America revenues expected to decline again and international activity roughly flat. Management emphasized that equipment attrition and limited new investment could tighten capacity quickly when demand inflects. Let's shift to international upstream. Chevron and partners have taken a positive final investment decision to expand the Leviathan field offshore Israel. The project adds wells, subsea infrastructure, and platform upgrades to lift output to roughly 2 billion cubic feet per day, with first gas targeted in the second half of 2029. It is a long-dated gas growth story with regional market significance. Also offshore, Equinor's near-field exploration program in Norway keeps paying off. 2 new finds and a successful appraisal support tieback-style developments, reinforcing the strategy of adding competitive barrels and molecules around existing hubs. Let's close with renewables and power. 3 U.S. offshore wind projects, Coastal Virginia, Revolution Wind, and Empire Wind, secured preliminary injunctions to resume construction after December's stop work orders. It is a near-term green light for crews to get back on site while the underlying cases continue. Keep your finger on the pulse of the energy industry with Enverus publications. Our experienced writers cut through the noise and deliver insights that help you stay ahead of the curve. To learn more, reach out to businessdevelopment@enverus.com or visit www.enverus.com. Thanks for listening. We'll see you next week.